This market off. I remain an optimist. We begin this evening with President Obama trying to deflect sagging poll numbers by using his Rose Garden pulpit to rail on big oil. CNBC Chief Washington Correspondent John Harwood joins us now with the details. Good evening, John.
Good evening, Larry. I'm not sure anyone needed reminders that energy politics would be at the center of the 2012 campaign, but we got one in the Rose Garden when the president, while Republicans were using budget votes to bash him on the Hill, walked out into the Rose Garden, tried to capitalize on public anger over high gas prices to rip into oil company profits and rip into Republicans for not joining him in taking away the industry's tax breaks.
It's not as if these companies can't stand on their own. Last year, the three biggest U.S. oil companies took home more than $80 billion in profits. Exxon pocketed nearly $4.7 million every hour. And when the price of oil goes up, prices at the pump go up, and so do these companies' profits.
Now, here's the voter sentiment the president was trying to capitalize on. Look at this Bloomberg poll. When you ask who's to blame for high gas prices, 2/3 say oil companies and Middle East nations, much more than the president. On the other hand, Republicans have a ready comeback. Look at these numbers from CBS New York Times. Does the president have substantial ability to do something about high gas prices? A majority say yes. And, of course, that's the response from Republicans, from the Speaker, from all the Republican leadership, which is if you take away the tax breaks the president wants to do, gas prices would be even higher, Larry.
All right. Many thanks, John Harwood in Washington, D.C. Now, folks, as Ronald Reagan famously said, there you go again. To me, all this sounds like more of the same from President Obama. Just take a listen to what I mean.
Right now, $4 billion of your tax dollars go straight to the oil industry. It's inexcusable. How do they deserve another $4 billion from taxpayers and subsidies? On top of the money they're getting from you at the gas station every time you fill up, they want some of your tax dollars as well. It's outrageous. Does anybody think that they need help? That they don't have enough incentive to drill for oil? Does that make any sense? All right, I just wanted to make sure, because I didn't think it was a wise use of your tax dollars.
All right, just a constant bashing. My quick rebuttal. First of all, we got new technology, and at current prices, we have recoverable oil reserves of 1.4 trillion barrels. That is 60 times President Obama's number. Combined with the explosion in natural gas, we are on the verge of North American energy independence with fossil fuel supplies that we will need for decades to come. On the question of subsidies, oil, natural gas, and coal receive 64 cents per megawatt hour in subsidies. But you know what? Wind power industries get $56.29 per megawatt hour. That's right, $56, 100 times as many subsidies. The American Petroleum Institute makes the case that while the president is talking about tax subsidies, he's really talking about depreciation write-offs for new investment. In fact, oil companies are eligible for only 6% deduction. Most manufacturers get 9%. Depreciation is important for business investment. In my book, everybody should have 100% write-offs. Now, regarding oil companies paying their fair share of taxes, their effective tax rate is 41% as of 2010, one of the highest taxed industries in America. And according to the Tax Foundation, between 1981 and 2008, oil and gas companies sent more tax dollars to Washington and state capitals than they earned in profits for shareholders. That is a fact. Now, if you ask me, all these tax preferences for all industries should be abolished. Just cut corporate tax rates, slash them. But just bashing oil and gas, it is unsupported political demagoguery, and it is unhelpful for future prosperity. All right, let's bring in our guest, Bart Chilton. He's commissioner of the Commodities Futures Trading Commission, and our pal CNBC's Rick Santelli. Bart, I say President Obama is wrong on his facts, and I think the country needs more fossil fuel drilling and pipelines if we are going to be prosperous. I don't understand the president's constant bashing of oil and gas.
Well, you're right that we need a panoply of energy sources, Larry, as you've talked about a bunch of times. But I do have some sympathy for, cutting $4 billion when the three largest oil companies are getting $80 billion in profits. The thing that concerns me, and we've talked about it before, is that there's also speculation going on there, and it's excessive speculation. We need speculation in markets, but I think that's also pushing the price of oil and gas up beyond what normal supply and demand would merit.
Well, Bart, I want to get Rick Santelli in on the speculation, but I just want to say, yes, oil companies are profitable. Yes, natural gas companies are profitable, but they pay a fortune in taxes. And I sort of heard you echo the Obama line. They pay more in federal and state taxes than they even make in profits for their shareholders. Those are facts. They have over 40% tax rate. What do you want out of them? This is supposed to be free market capitalism, Bart Chilton.
Well, so that they're only going to bring in $76 billion in profit if we do away with the $4 billion, Larry? Does that really trouble you that they're only going to get $76 billion in profits instead of 80?
No, it troubles me that they're being singled out. That's what troubles me. Rick Santelli, you can respond on that point, or Bart Chilton wants speculators. I don't know if he wants them done away with, but he's blaming oil prices on speculators.
Oh, they're part of it, not all of it.
What's your take on that? Speculators, traders, investors, Rick Santelli?
Well, when I see the S&P move up in Ben Bernanke's style, I don't see speculators getting yelled at with regard to what they're trading in equities. When I see the grain markets move up and down and realize that less than 1.5% actually take delivery, who's trading the rest of the market, I don't see that being singled out. When you look at countries like China before they got involved in the markets, there were shortages of scarce resources. The market allocates well. And I know that Bart Chilton thinks speculation is a problem, and he's quoted many studies like the Goldman study. Are you aware of that Goldman study, Bart?
Yeah, I'm absolutely aware. It says that for every million barrels of speculative long, it adds 8 to 10 cents per barrel. And if you extrapolate that, Rick, it means that we're paying $23 a barrel just for speculation. Now, we need that speculation. Absolutely. I agree with people on that. It's just that there's excessive speculation now. We've gone from about 60% of speculators in the oil market to 85% just in the last few years. And obviously, that's going to have sort of a lifting all boats effect like the tide. So I'm not saying that speculators are bad.
I like all those facts. Now let me give you my take on it. First of all, on the 85%, I went back and used CFTC data on your own website. And what you did was you included the swaps dealers in that 85%. The real number is speculators 48%, swap dealers close to 37%. Swap dealers are in the CFTC's backyard. You haven't regulated them or deemed whether they should pay more margins. You let them get away with being considered hedgers, but indeed, that OTC market, whether in subprime commodities or oil, that swap market needs to be dealt with. I think the CFTC is rather negligent there, and that Goldman study you just quoted, we found that the independent authors of that study actually addressed you directly. Let's show it on the screen. Commissioner Chilton characterizes this as speculation, with the suggestion it is unrelated to supply and demand conditions in the oil market. We disagree. In our view, this is the mechanism by which the oil market becomes better informed and reaches consensus on issues such as an improving economy, the outlook on demand, and increasing tensions in Iran regarding crude oil. I think what you consider speculation is the market trying to grapple with all the issues. If there was no markets, my guess is oil would be much higher. I think the argument is speculation's probably lower price. Who are you going to have allocate these scarce resources, Bart?
And by the
Barney Frank?
By the way, yeah, Bart Chilton, I mean, obviously, speculators and traders and investors can sell just as much as they can buy. When you look at what's happening,
natural gas.
That's right. Took the words right out of my mouth, Rick Santelli. The plunge in natural gas prices. And by the way, we're seeing a nice sell-off in crude oil prices. Bart Chilton, the Goldman people don't agree with the study and your work, and Rick has issued you a challenge on your own supervision.
I'm happy to have the opportunity to respond, Larry. Two things. One, on the OTC market, Rick, I agree with you 100%. We need to implement...
So what are we doing about it? Same thing we did with MF. Is Mr. Gensler allowed to weigh in on this? Does he have any friends?
Hey, do me a solid. Give me just a minute here. So, look, it seems to me that we need to, that swaps are also part of the price discovery. I agree with you. That's why that 85% is there. Now, with regard to the Goldman study, I've met with them many times. There's no disagreement on what they said. I didn't make this up. This is from Goldman. It's what, and here's the difference. And it may not make for great TV, but speculation's a good thing. We agree with that.
Right.
What I'm saying is that there's a different type of speculator in the market now. I call them massive passives because they're the likes of pension funds, and they stay in the markets and they go long. For every long massive passive, there are 12 that want to go long and only one that wants to go short in the market.
But why
That's
are prices
different.
falling? In those circumstances, here's what I don't understand. We unfortunately don't have enough time to pursue this, but Bart, if everybody wants to go long, why are these prices falling? And natural gas is a perfect indicator. Supplies are booming and prices are falling, and therefore traders, investors are selling because they're taking and processing the information. That's what a free market economy does.
Well, my tip of the hat is maybe they listened to your show and they thought that they'd peaked. But I think in reality what's happening, Larry, is that these are longer-term trends. I'm not talking about, you know, if somebody said, can you predict if it's going to be higher or lower tomorrow, I guess I'd have a 50% chance of being right.
I got to jump out. I'm sorry. This is a great
Larry, before you
discussion.
jump, though, real quick, before you jump, his 12-to-1 passive, there's no research that backs it up, and I just looked at a chart of the index positions versus the price of WTI oil going back for a year, and there's no correlation.
There's plenty of research, Larry. Look at our website, cftc.gov.
I did. That's where I got my arguments,
We'll have
buddy.
you back. Rick Santelli, we'd love to have both you guys. I just think crude oil prices are peaked, and I think gasoline at the pump is going to peak, too. That's my surprise. Bart Chilton, thank you very much. Rick Santelli, great stuff. Now, folks, as we've been reporting, natural gas plunged almost 6% to a 10-year low. President doesn't do any favors by slamming down oil companies, but aiming for natural gas companies as well. Energy Information Administration says natural gas output at its highest in history in January. Natural gas is the untapped resource that will power this economy if we let it. My pal Jimmy Cramer agrees. Good evening, Jim. What you got?
All right, Larry, listen up. The president demonizes the oil companies because the polls say that people hate oil and gas. Okay, hey, I get that. It's election year. Forget the fact that we're in a moment where we really can drill our way closer to energy independence for this continent and focus on the fact that the president refuses to recognize that not all petrol products are created equally. At this very moment, natural gas is on the verge of cracking $2. It is so low because we have way too much, and it is landlocked because of the difficulties exporting it. That means it can be used to the detriment of imported oil for the gigantic trucking market that burns 1/4 of what we import. You want the price of oil to come down? You don't need to drill. You just need to use this cleaner domestic fuel that would put a lot of people to work and make us less dependent upon the Straits of Hormuz and the potential for conflict that threatens to block it. It is simply not true that we can't bring down the price of oil. It's not true. A real competitor, liquefied natural gas, would destroy the pricing structure of oil and bring down gasoline's cost. If you actually wanted that to happen, you would know this fact. The president makes it a point every time to say that oil companies are making a fortune, and yet if we emphasize non-fossil fuels like wind and solar, we can over time wean ourselves away from fossil fuels. But he refuses to acknowledge the fact, and it is a fact, that these alternatives do not work for surface vehicles, and that's who's burning all the oil. By not acknowledging the difference between nat gas and oil, the president has doomed us to higher gasoline prices, less energy security, fewer jobs, a terrible balance of payments, and dirtier skies. How is that good? How? I can't figure it. All just to prove a point that fossil fuels of all kinds are bad? Larry, it is so wrong. It is so wrong. Lawrence, back to you.
All right, Jimmy Cramer.